Accumulation, year-to-date calculated measures on paystubs. Year-to-date, sometimes written as YTD, on a paystubs can seem like an extra detail. What might not be clear is that a YTD doesn't only apply to business/financial information, it can also be used in a variety of contexts. The main idea is that a YTD is used for keeping records of the outcome of activity between a current date and the start of the year. What is a year-to-date? A year-to-date, YTD, is a piece of information that indicates the timeline between day one of the years, whether calendar or fiscal, and the current date. It's needed to give a broad picture of any venture and to set up a performance analysis over a given period in time. It provides a measure of performance analysis for a business or enterprise and can aid business owners with forecasting and planning the business moving forward. This information is also used by business owners and managers to track the expenses of the company at intervals throughout the year. Employees use a YTD analysis to keep track of their earnings for the year and plan for their future. Why is YTD in payroll important to your company? The year-to-date payroll of your firm allows you to easily compare your employee payroll expenses to the full annual budget for those charges. By comparing the two, you may establish the amount spent for payroll versus total business expenses. Knowing your YTD in payroll allows you to determine whether your organization is on track to fulfill its planned results. You can simply make recruiting and budget cuts based on these YTD payroll figures. Aside from assisting with important tax slips, year-to-date payroll allows you to forecast your possible tax liability. To manage purchases and overall cash flow, business owners must be aware of their quarterly and yearly tax liabilities. Year-to-date in a financial context. A year-to-date in the financial context provides information on financial statements that give details of the performance of a business. This statement helps business owners, managers, investors, both existing and potential, as well as stakeholders to make a solid comparison between the company's previous performance and current performance for a given period. It shows the returns of the company per year for the timeline used in computing the YTD, which may be a calendar or fiscal year. Financial information of employees is also highlighted by YTD on paystubs and reveals the amount earned in the stated period. Calendar or fiscal year to date. Whatever type of timeline you choose for a year to date, the result is usually a cumulative total from the start of the annual period. If a calendar year is used as a timeline, it follows that the calculation runs from January 1st to the current date of analysis for the year. In cases where the fiscal year is used as a timeline, it must not necessarily begin from January 1st, but at varying rates depending on the company. A year-to-date calculation is valuable to both companies, investors, and individuals. Is year-to-date in any way relevant on paystubs? A year-to-date paystub is relevant for both employers and employees since the year-to-date values of every earnings, tax, or deductions are calculable. Relevance of year-to-date on paystubs for employers. Its value helps employers grasp all financial involvement in a given month, quarter, and year. The numbers, in addition to balancing the accounts, are also significant for calculating tax liabilities. They're also necessary for filing payroll forms and employment forms like the W-2 and 1099, which can all be curated on PayStubsNow and sent to your email. Employers can utilize the year-to-date information to stay on top of their annual budgets and expenses. Relevance of year-to-date on paystubs for employees. Employees use the YTD numbers on their paystubs to know how much they've earned for the year and how much was withheld and paid for taxes and other deductions. An excellent paystubs will most likely have all the earnings broken down from regular earnings to holiday and overtime pay, etc. Also, taxes, other deductions, withholdings, and even contributions are captured. Year-to-date numbers can also be used by employees to compare between different jobs in years. They can always have a clear picture of how much progress they've made financially, which can be gratifying. Measures of year-to-date returns. This measure of year-to-date computation reflects the amount generated by an investment as profit from the first day of the current year. It helps investors and business analysts assess the profitability of an investment over a given period. Usually presented in percentage calculation, YTD returns equals current returns value, returns, the value of the first day, divided by returns value of the first day, multiplied by 100. If an investment was worth $100,000 on the first day and is worth $150,000 currently, it would have a year-to-date return of 50%. Year-to-date measures on paystubs. Employees can view their year-to-date payroll wages on every paystub you've issued, either online or physically. As a business owner, you should make it a habit to provide a pay stub to each employee. A pay stub is essential for your employee since it indicates the wages earned for a certain pay period as well as the wages earned year to date. A pay stub shows an employee's total earnings, taxes and deductions, and net earnings. Income stubs are vital for assisting your employees in managing their pay, cash flow, and determining whether they will owe the CRA any money before filing. Year-to-date measures on pay stubs are used to describe different amounts such as YTD, gross. It is the amount of money an employee, an independent contractor, or a business earns from the first day of the year to the current date before deductions like taxation, social security, etc. YTD, net pay. This is the amount earned or generated for the year after all tax deductions have been made. It's the earner's take-home income and a prominent feature of most pay stubs. The value is obtained by subtracting all taxes and other amounts withheld from the total earning from day one of the years from gross earnings. Deductions. This reflects the amount that has been deducted from the year-to-date gross for taxes and other statutory deductions or withholdings. Such deductions may include taxes and contributions for a retirement plan, etc. YTD hours. This reflects the number of hours that an employee has worked for the year. YTD revenue. This applies to businesses and companies to track their profitability and revenue generation. Payroll year-to-date calculator. Gather each employee's pay stub and determine the year-to-date gross earnings to simply calculate your company's year-to-date payroll. For instance, suppose you have 4 employees at your company: Ashley, Carson, Ollie, and Soraya. Ashley has made a total of $36,000 in gross pay so far this year. Carson was paid $46,000, Ollie was paid $22,000, and Soraya was paid $56,000. When you add these 4 year-to-date wages together, your total YTD payroll is $160,000. Soraya, the company's star salesperson, also earned a huge commission of $10,000 at the end of last year, but has yet to be paid. That must be accounted for in your YTD payroll. Your company's year-to-date payroll is now $170,000. YTD payroll calculation without pay stubs. Pay stubs missing? No worries. Not all employers are required to furnish pay stubs to their employees. If this is the case in your company, simply multiply each employee's gross salary each pay period by the number of checks received. You have 2 employees, for example, Sebastian and Sage. Each has been paid for a total of 13 pay periods. Sage got $3,500 in gross income per pay period, whereas Sebastian earned $1,500. Add those figures together and multiply them by the number of pay periods. Sage's year-to-date earnings are $45,500, while Sebastian's are $19,500. Once you've done that, add the 2 YTD sums together. Your company's total YTD payroll is $65,000. That's all there is to it. An easy-to-follow guide about YTD in payroll and how to manage it with ease. Discover your YTD spending and saving habits. Using time period measurements such as year-to-date, QOQ, and MTD provides financial planning and analysis teams and senior leaders designing financial management strategy with a variety of approaches to assess the financial health of the company. The days of relying on spreadsheets to determine these time period metrics, however, are coming to an end. Accounting, bookkeeping, and expenditure management software development now makes time period measuring quick and easy. FAQs. What does year-to-date mean on a pay stub? They're the amount of money a person earns from the first day of the year to the current date. It's the financial value on a pay stubs that shows the total earnings from the beginning of the year, calendar or fiscal. What is year-to-date gross pay? It's the total earnings of an employee from the first date of the year to the current date before taxes and other deductions. This is quite different when tax deductions have been made, in which case it becomes year-to-date net pay. Must a year-to-date always start from January 1st? A year-to-date beginning from January 1st is calculated by the calendar year, which must not always be the case. Most businesses can decide to begin the calculation of their year-to-date from the start of their fiscal year. This enables companies to annually analyze their business ventures at intervals.